As you have just seen, the history of money, from the barter system to the credit card system, is a fascinating story. And knowing where money comes from makes it easier to understand how it works today. I hope you have enjoyed your tour through the bank's new exhibit on the history of money. Please come again.
Excuse me. Huh? I'm the new security guard here. I heard some strange noises, so I came to investigate.
What's going on
here? I thought this area was off limits to everybody.
I'm just taking a sneak preview of the bank's new exhibit. My friend here has been giving me a guided tour. Well, I get the place all pretty and polished for tomorrow's grand opening. There's nothing to worry about, Mr. Franklin Finch.
Well, that's one of the first things they teach in security school, you know, is to check out all irregularities.
Oh, well, I've been called plenty of things in my day, but never an irregularity. Name's Katie Gerard. I'm pleased to meet you, Franklin.
Hi.
And, you know, I've been around this place a long time. In fact, Mr. Johnson says this bank probably wouldn't open up each day without old Katie.
Who's Mr. Johnson?
Well, he only runs this bank.
Oh.
In fact, this whole exhibit was his idea. Now, he thinks people need to learn more about where money comes from, so that's what I've been doing. Hey, listen, as long as you're here, why not let me show you what I've learned?
No. I really have to be getting back to my rounds.
Oh, come on, it'll just take a minute.
No, really, I have to be getting back. What's that doing here?
That piggy was used before we had money. See, if I was a farmer raising chickens, and you were a farmer raising pigs, and I wanted a pig and you wanted a chicken, we would just swap, or barter, as it was called.
But what if I didn't want your chickens, but you still wanted my pigs?
Well, the barter system worked fine, as long as you could find somebody who had what you needed and needed what you had. Now, let's just say that there's still no money right now, okay?
That's easy.
All right. Now, say I wanted something of yours, your security badge, and all I had to trade was this vacuum cleaner.
But I don't need a vacuum cleaner, but I certainly need my badge.
All right, then think of something that you do need.
Brakes. New brakes for my car. And a muffler. And fact is, I need a new car.
Well, let's just say brakes.
Brakes.
All right. Now, I happen to find somebody with brakes who wants a vacuum cleaner. Go to him, make the trade, and then come back to you and trade the brakes for the badge.
There must be an easier way.
Exactly. That's where money comes in. Come on over here. See, I could give you money for the badge. Say $100 or 100 dog's teeth or whatever is the going form of money. You can now exchange money for the brakes. And that's the #1 function of money. It is a convenient medium of exchange.
You're really smart for a cleaning lady. I mean, a woman
I am not a cleaning woman. I am a maintenance manager, if you please. And I know more about what's going on in this bank than most loan officers.
I bet you do.
You know, for a long time, I just looked on this as another place to work. Then I got kind of curious about what was going on around here. And I did have all my savings in this bank, so I made it my business to find out.
It's weird to think that people used to use trading beads, shells, nails as money.
Well, those things had value for the people who used them. Like your badge has value for you.
Yeah, I come to think of it, I don't think I'd sell it for $100.
Well, then you could set a higher price, don't you see? Come here, look. Money is not only a medium of exchange, it is a standard of value. Now, with money, we can compare the value of things and set prices. Now, if your badge is very valuable, you might set a higher price.
Maybe I could sell it for $1,000.
Oh, well, all right. Let's say that I accept this very high standard of value you put on your badge. But here was I with a cleaning woman's maintenance manager's salary. What could I do?
You could save up.
Yes, and that brings us to the third function of money. Money gives us a, together, store of value.
Jeez. Yeah. If you thought it was a mess with the dog's teeth and the chickens, I mean, look at this. It looks like every state had its own form of money.
Yeah, but then they finally gave in and adopted a national form of money. But even now, Whether it's dog's teeth or dollar bills, what we're using as money is really based on trust. If we stop trusting the money we're using, the economy's in big trouble.
Oh, just like me if I don't get back to my rounds. Hey, I have to make a check in the vault area.
Oh, well, hold on. I'm going your way. Let me get my
please.
card. Okay. Oh. You know, I think I saw you drive up to work tonight. Is that your car, that old maroonish heap?
Terrible, isn't it?
Well, it's no Maserati.
I'm saving up to buy a new one. I figure at about $50 a month, it'll take me, about 4 years.
That old car of yours will be in the junk heap long before you saved enough. Say, why don't you take a loan from the bank?
No.
Well, for heaven's sake, I didn't say rob the bank. What's so terrible about a loan?
Look, my father went bankrupt when I was a kid. I swore I'd never borrow a penny as long as I live.
Oh, well, sure. I can understand that. Sure I can. Some people just don't know when to stop borrowing. But if Katie Gerard is any judge of character, and she is, you're no spendthrift.
Well, I try not to be.
Well, that's why you're the perfect person to get a loan. Good job, reliable. Now, if you were to get a loan, I'm just saying if, you could have a brand new car and pay your $50 a month while you're driving it. That's how I'm paying for mine.
A new car would be great, but,
Hey, wait a minute. I got an idea. It's okay. Come on. Come on. Now, then, Mr. Finch. Come on, Frankie. I understand that you are in need of a new car. Perhaps something in a turbocharged 5-speed
look,
jet black
I'm really not
sports
very
car.
good at pretending.
Well, I wasn't very good at banking until I came to work here. Come on, Frankie. Now, Mr. Finch, about that loan.
Yes. I would like a new car. And I do have a steady job. But my father, he had
Well,
this...
now, none of that on the loan application. As long as you are an adult and have a steady job, we don't need to know anything else. Unless you yourself have some outstanding debts.
Oh, no, I don't. Not one.
Well, then, Mr. Finch, I would be pleased to approve your application. Now, you will need to make small monthly payments with interest over a period of 3 years. And then you...
Bravo, Katie. I couldn't have done a better job myself.
Mr. Johnson, what are you doing here at this hour?
We're working on a speech for the opening of the exhibit tomorrow, and you, I see, have been moonlighting as a loan officer.
Oh, well, I'm just trying to convince our new guard here to become a bank customer. Oh, Mr. Finch, this is Mr. Johnson.
Hello, sir. I'll be getting right back to my rounds. I have to go check the vault area.
Oh, come here, Frankie. Mr. Franklin Finch is a very careful young man, don't you know? That's why he's going to be such a good security guard. But before he opens an account here or takes out a loan, he'll probably want to know exactly what happens to the money in his bank and where we get the money we lend.
Katie, that sounds like a hint if ever I've heard one. Well, let's see if I can help. The money that banks lend, Mr. Finch, comes from deposits that people make in their savings or their checking account.
Those are people just like me and you, Frankie. Only when I put my money into a savings account, I'm not only helping the bank, I'm helping good old Katie. See? Now, my savings earn interest. Yeah, and I'm protecting my money from being stolen or maybe even destroyed by fire.
But I need my paycheck to buy things and to pay my rent.
Well, of course
Lord knows that paycheck goes, so you open a checking account. It is much easier and much safer than carrying around a lot of cash.
Just what I was going to suggest. See, more than 90% of the money in this country is in checking accounts. When you pay by check, the transfer of funds happens within a bank or between banks or with electronic transfer almost quicker than you can blink an eye.
And bank robberies can happen just as fast. Maybe we could talk some more in the vault area. It's really time to close it up.
Okay, Franklin, but it's been quiet as a tomb here.
I know, but they always taught me in security school, don't be fooled by silence. Good crooks are quiet, and there's a lot of money to be had in that vault. So please, let's check it out.
And why would there be money in the vault? Mr. Johnson said they just lend out all the money that comes in.
Well, not all of it, Katie. When you deposit money with us, the Federal Reserve Board requires us to keep a certain amount of it on reserve. The rest we lend out.
So when Katie puts money in the bank, she's helping to make it possible for me to get a loan.
Well, that's the idea, anyway. It takes a lot of Katies to make these loans possible. This works both ways. When the bank lends out money, say to you, it not only helps you get your car, it stimulates business, increases the money supply, and helps the community grow.
I never thought me borrowing money could do anybody else any good.
The more money that's borrowed, the more money there is in the community. Of course, I wouldn't advise anyone to go too deeply into debt. In your case, Mr. Finch, I'd say why not go for a more moderate-priced car?
The 5-speed turbocharged sports car, that was Katie's idea. A simple 2-door's what I want, but even with my savings, I'd need $4,000.
It could still be a black and shiny 2-door.
Okay, let's assume that you get the $4,000 from us. You give it to the car dealer. He deposits it in the bank, which puts 10% or $400 on reserve, and then they can lend out $3,600 to the next customer, say a factory owner who needs a loan to add a new machine to his production line. He gets the loan, pays the machine manufacturer, who then deposits the money into another bank, which puts 10% on the reserve, and let's see, that would leave $3,240 for the next customer. So the original sum of $4,000 keeps getting used over and over again, and it can expand to, let's see, $40,000.
Wow! So the money supply keeps growing and we get richer and richer?
But there has to be a limit to all that loaning.
Spoken like a true banker. You're right, Mr. Finch. There is a limit. If the money supply just kept growing, we'd have terrible inflation.
Did you hear something?
No.
I thought for sure I heard something.
Oh, Frankie, it's
No,
all
really,
right.
I heard something.
Now, what was that about inflation?
Well, the control that curbs the money supply is called the Federal Reserve System. It's the Federal Reserve that's kept me here late tonight.
I thought you said it was a speech for the grand opening of the exhibit.
Well, that's true, but you see, that's what the speech is all about. And my daughter's high school class is coming to see the exhibit tomorrow, and I told her teacher that I would say a few words about the Federal Reserve System. Me and my big mouth, I can just see all those high school sophomores squirming and fidgeting while I try to tell them about the Fed.
Well, why don't you try the speech out on us?
Oh, I don't want to keep you here any later, Katie.
Nonsense, Mr. Johnson. I'd love to hear it.
Oh, really? I don't think I should.
Franklin and I are both very interested in hearing about the Federal Reserve System. Now, aren't we, Frankie?
Yes.
All right, come on, bring a couple chairs. We're going to listen to a speech. Now, that looks like a good speaker's table. Come on, Mr. Johnson, right over there. Go on.
The Federal Reserve is really a bank's bank. Now, the Fed, as we call it, not always so affectionately, watches the economy and controls money supply through what is called its monetary policy. Now, first of all, the Fed can buy and sell government bonds on the open market. Now, this has a direct effect on the money supply. Now, second, it controls the percentage of the money that banks are required to keep on reserve. What we talked about before with the loan. Now, I mentioned 10% as an example of a reserve requirement. But now let's say the Fed found that there was too much money circulating, which could lead to inflation. Now, they might want to tighten the money supply. Then they could raise the reserve requirement, say to 20%, and the banks would have less to lend out. How am I doing? Any questions so far?
Yeah, I have a question. What if the banks have to borrow money?
Well, that's That's a good question, Katie. The banks can borrow money from the Federal Reserve. It's a bank for the bank. See? Now, the discount rate is the interest the Fed charges when it lends money to the banks. The banks will pass on this interest rate to their customers. If the discount rate is high, they pass along a high interest rate.
And people are less likely to take out loans.
Exactly. And if the interest rates are low...
Too much borrowing?
Right. Then the Fed can raise the discount rate and up go the interest rate, see? So the discount rate is another way the Fed can control the money supply. See? Oh, my goodness, look at the time. I was supposed to call my wife an hour ago for a ride. She's probably in bed by now.
Why don't I give you a lift?
Oh, it's too far out of your way, Katie.
Mr. Johnson, I insist. Now, come on, get your stuff together, and don't forget your coat, huh? I'll have you home in 5 minutes.
Katie, I don't know what I'd do without you. Good to meet you, Mr. Finch. I feel we're in good hands with you here.
Oh, thank you, sir. And I do feel better about banks.
Good enough to take out that loan?
I'll have to think about it.
Think about it. Nonsense. Now, you stick around this bank till 9 a.m. opening time. You'll get that loan, no problem, huh? Oh, we'd better hurry. We don't want Mrs. Johnson to worry.
Mr. Finch, I told you, it was the Fed who controls the banks. It's Katie Gerard who runs this one.
Oh.
Which one is your car, Katie?
Oh, that little 5-speed turbocharged jet black sports car over there. Oh, come on.